Hi, it's Chris Lamm with Commerce Home Mortgage. Thank you guys so much for checking out this month's market update. It's December 2017. I just feel like it was January a month ago. I cannot believe we're at the end of the year. We're going to cover just a couple topics this month. Starting out, just kind of wanted to recap the year. Now, taking you back to January of this year, if you guys remember, it was right after the election. The stock market was rallying. It's obviously ending even better than it started this year. We've seen unprecedented levels in the stock market. Most of my clients are looking at their retirement portfolios are very happy this year with what they're seeing. On the other note, if we talk about interest rates went up over 0.75% from their 2016 levels right after Donald Trump was voted in due to the bond market kind of selling off. With that being said, rates were still very good. They went up to right around 4.25%, or slightly higher towards the beginning of the year, and they're ending the year right in the 4% range. So it's been a very good year for interest rates. They are up higher than where they were in 2016, but if you want to keep it in perspective, the 60-year average mortgage rate for a 30-year fixed mortgage is 6%. So being down here in the fours is still rates that are at all-time lows. So it's really important to note that. The other thing I wanted to touch on, I just got a report from one of our local appraisers, and he just did an analysis from the beginning of 2017. And home values in Shasta County are up 7% this year, just in 1 year, which is amazing. California home values are up about 8%, so it's very similar throughout the state. Most people predict 2018 to be a very strong year. We don't expect seeing rates going up by much. Even if the Federal Reserve raises rates at the beginning of the year, which we expect he probably will, there's still a lack of inventory. It's the same story, different day. And when you have more buyers than you have sellers, prices are probably still going to go up. And so it's really exciting looking into next year. I think we're going to have a very similar year to what we had this year. The next thing I wanted to talk about are a couple of the changes that have come into effect in December of 2017. So the beginning of this month, we got news that the conventional lending limit for Shasta County is going to go up from where it's currently at, $424,100 up to $453,100 in January of 2018. Now, this is really good news. For people that are buying homes in that $500,000 plus range, they've been limited on what they can borrow unless they want to look at an alternative type of loan, like a jumbo loan or something like that, where oftentimes the terms are not as good or the process is a little tougher to get a loan from the appraisal standpoint, etc. So taking that lending limit up here in the county, overall, I think is going to be a really good thing. I think it's going to allow that higher end market to grow a little bit more. We're going to probably see more sales there. It's going to allow people to get financing a little bit easier with better terms that are buying in that high end area here in Shasta County. So that's pretty exciting, something to take a look at. The next part that I want to talk about is probably the most important thing that we're telling all of our clients about is what's coming up with this tax reform that was just signed by the House and is still with the Senate. As of Saturday, one of the CPAs here in Shasta County got a document, and he shared with me a couple of the things that he sees are going to probably impact home buyers the most. I wanted to just take some time here because this is really important information to kind of tell you what it looks like is probably going to be coming down the pipe here. Number one, both in the House and Senate, property taxes on residences that are not income producing, so this would be your primary residence, are going to be limited to $10,000 for that deduction. So people that have mortgages north of $500,000 are going to be limited now on what they can write off at the end of the year. And so that's a really important thing to look at. One of the second things that he talked about is that people that have home equity lines of credit on their current primary residence historically have always been able to write that interest off as an interest deduction. They will no longer be able to write off lines of credit against their primary residence if this thing passes, which it really looks like it's going to. And then the next thing that is also a big deal is people that have a second home, which would include a summer home or an RV or a vacation rental. There's a lot of people up here that have those. Under the old way of doing things, you could write that off almost very similar to a primary residence. If it's a second home, you will no longer be able to write that off against your taxes. So that's a very significant change there. And I think the last one here is probably the biggest one that we want to talk about. Historically, if you buy a primary residence and you stay in that home for 2 years, you can sell the house and up to $500,000 of gain you can take from that home without having to claim that as a capital gain. this is a really big deal. And most people stay in their house for 2 years so that they can sell their house at a profit and not have to worry about paying taxes on it. Well, with this new bill that is in with the Senate right now, and it looks like it's very likely that this is going to go through, you would now have to stay in your house for 5 years versus 2 years before you could write off that gain. And for anyone that hasn't sold their home by 12/31 of 17, so by the end of this month, or if you're not in a binding sales contract, meaning that your home is for sale and pending, if you haven't been in that house for 5 years, this would apply to you. So this is a really, really big deal for people that are currently going to sell their house, thinking about selling their house, and they haven't been in their house for 5 years. Something to really consider. And if you guys have questions on this, feel free to give me a call here at the office. Well, the last thing we wanted to touch on, it's the end of the year. We just want to tell everyone we're super grateful for all the support this year. Here in our office, me and the guys, we've had another awesome year. It's been fun. We've had lots of challenges, but we've had a ton of great interactions with clients. We've helped a lot of people get into homes. We also want to thank you guys for voting us Best of North State. That was another really cool thing that happened last month. I want to personally thank a couple people for the month of November for referring to us. Bonnie, Andrew, Charlie, Aaron, Carol, Richard, Lindsay, and Kathy. We're super grateful that you referred some clients to us, and we're going to start calling people out every single month, letting them know how much we appreciate the referrals that you sent into our office. So obviously, if you guys need anything at all, you can call me here at the office, send me an email. I hope everybody has a Merry Christmas, and we'll talk to you soon.